Dave has been a partner with us for the last year as we've rolled out our Associates Investment Group, and we brought on the IntroLend mortgage platform, which is an open source mortgage platform. And Dave, I just want to take a second as we've got all of this going on with the coronavirus. On top of that, we have the gymnastics that the stock market is doing. And the big question we've gotten from the agents this week is, on Sunday, the Feds announced a 100 bips rate cut. What the question is why is this not being reflected at the consumer level? A lot of people expected that, hey, they dropped at a point, rates should have gone from 4.25 to 3.25 in one day, and maybe just some professional advice on why that didn't happen.
Absolutely. Thanks, Ron. Good to be here. Super excited to be a part of this platform. As you know, IntroLend Utah is really close to my heart. You've been a visionary through this process and helping us build this. So thank you, and all of the agents at RE/MAX Associates. We love working with you guys. So related to interest rates, this is kind of a first time I've seen what is happening in interest rates in the 32 years I've been doing mortgage banking. But a couple of things to consider. Number one, when the Fed is lowering interest rates, those are interest rates that the banks borrow from each other overnight, and it helps reduce the cost of banking, which the concept there is eventually that will trickle down into lower consumer interest rates on all kinds of products, auto loans, credit cards, and mortgage loans. So there's really not a direct correlation in that. But more importantly, if we look at the mortgage market, we can see some other disconnected aspects of it. We see record-breaking low yields in treasury bonds, and specifically the 10-year on the government side. And typically those are correlated to interest rates. So that's the bigger question mark. Well, those are historical highs in price, low in rate. Why haven't mortgage rates come down? And really what we're seeing in the marketplace, Ron, is an issue where most companies are just full at capacity. And so there's a whole bunch of structural things happening within those firms that they are using higher interest rates as a valve to kind of slow down volume. And so, for the first time that I've seen it utilized that way kind of across the whole entire board, we kind of have these artificially high mortgage interest rates. And that's to kind of slow down that flow because there's only so much capacity in the industry. And all of a sudden we had these super low interest rates and a bunch of consumers rushed into refinance, and that just kind of clogged up the pipes everywhere. So, we're seeing, and then of course, you've got a lot of really complex things happening in the stock market, as you'd mentioned, in the bond market, and things are just flopping back and forth every day. And it's really super hard for companies to hedge their pipelines and manage their pipelines, and there's cash considerations and liquid considerations. And so all of these things kind of tends to artificially kick those up. I think that's temporary. I think that, we're already starting to see some firms get a hold of it and kind of come back down. But there's perfect storm things going on that have put us in a really big question mark, right?
Yeah, no, thank you. That makes a lot of sense, and it kind of leads right into the second question that we had, and part of it probably all just ties together, but we have heard of some lending institutions that are having liquidity problems. And when I say that they aren't able, or they're struggling to, or they're worried about, the funds, the loans that they've originated. So one of that is you're saying so much volume came in that there's only so many man hours. On top of that, people are sick and working from home, or social distancing is being practiced. And then on top of that, we've heard that some folks are short on money. Can you explain how that works?
Yeah, absolutely. A lot of different kinds of companies out there. You've got your independent mortgage bankers. You've got your depository banks, credit unions, brokerages. So each one of those kind of firms are all going to have different types of issues. But what we do know is that some some firms like a big depository bank like a Wells Fargo, super liquefied organization. They can even go create liquidity directly from the window. So certainly not concerns there. The concern there is what's capacity, right? I mean, if a transaction goes there, how many days, weeks, and months is it going to take to get it out the other side? So those are the questions. From a liquidity standpoint, what happens when certain kinds of lenders, they'll get a whole bunch of business in, and it'll kind of flood their systems. Well, every transaction they do, they've got costs associated with each one of those transactions that are upfront costs. And they got to pay those upfront costs. And then eventually, when that transaction sells into the secondary market, they recoup cash. And that cash helps them run their business. So when we think of a liquidity problem, it's just cash, right? And if we look at a business, we can say, how much cash do we need this week to run the business this week? And let's say they needed $1 million to run the business that week, but yet everything's clogged up. There's more transactions coming in than are going out because pipelines are kind of clogged up in the system right now. So there's more expense for that week than there is cash coming in. Let's say you need $1 million in cash to pay for warehouse haircuts, curtailments, margin calls, employment, salaries, overhead, leases, financing, on and on and on, all the things you need to run the business that week. Well, all these kind of pipelines are clogged up, and now you've only got, say, $800,000 in cash coming in that week, but you have $1 million in cash flow needs. So that illiquidity, I'm short $200,000 that week. That's what we're talking about. And that becomes really, really problematic for some types of lenders, because they need to go find ways to fill those gaps and to balance that out, because that can become a bigger and bigger problem every week. And it's really important that we're careful as agents at Remax and Associates, and that we're communicating really well with all of our member lenders, and every lender that we work with, to have really honest conversations and get information from them. We will help you sift through that information and kind of make the great decisions. And to put a little pitch out for IntroLend Utah, that's what IntroLend Utah was designed to do. It was designed to leverage the entire lending market, retail and wholesale. We introduce the client to retail lenders, or we introduce the client to wholesale lenders. Well, in an environment like this, that becomes even more powerful and helpful, as we can also make sure we're introducing clients into lenders that we know have strong balance sheets, great liquidity, and they're able to weather these kinds of storms. Most great independent mortgage banks and large brokerages and whatnot, and even small banks, are absolutely able to do that. They're wonderful, wonderful companies. But there's certainly some that will struggle, and they can find themselves in a pickle. And it's a good idea that we're careful about where we're sending transactions, so that we can make sure we can avoid that as much as possible.
Yeah, no, I appreciate it. Thank you. I mean, your team, you yourself, your team, are always looking out for us and giving us updates on what we're doing and who we're partnering with and who we're tied into. As an agent, what can we do when we're writing a contract to help make sure that we're not causing problems? For example, timelines or setting expectations. What advice could you give us? Because this is just, right now there's a fear factor out there in our society. Everyone's a little bit nervous, and we're trying to keep them calm. So what can we get a little tip, maybe just to help us avoid a pitfall of causing somebody to have some stress during this time?
Absolutely. And certainly preaching to the choir here. Remax Associates is made up of such an amazing group of professionals and communicators. And I really do think that, Ron, to your point, it comes down to communication and over communication. Knowledge transfer is key. So as you're learning information directly from all of the different resources that you use. Read all the different industry news articles and blogs, and be up. And every day it's changing, right? So get that information in really quickly, and make sure that you're armed with really good knowledge that you can share with the customer, and intelligently be able to explain to them what you think we should do, as a way to set really great expectations, but also to calm their nerves. To your point, right?
Yeah.
And I say, yeah, exactly. And I would say, you know, we're always driving service in this business. Like, I can do it quicker than the next guy. But there's some real problems right now. There's some structural things in the industry that are outside of Remax's capability. They're outside of any lender's capability, related to how long it takes to get an appraisal or a home inspection, all sorts of things. You know, a lot of different people that might be on a furlough. You know, they might not be able to close until they come off the furlough. So there's just this. There's a whole basket of things that it's really difficult for us to kind of gauge, is that going to get better in the weeks ahead, or is that going to get worse in the weeks ahead? What I say is, let's don't try to predict what's going on. Let's just go safe, and let's educate the client, and let's say, hey, it could get better, but why don't we plan for it to get worse? And let's just set our time way out there. And I think the idea here would be to undersell and over deliver, right? You know,
Yeah.
set the timeline way out there so that we're not blowing up rep C dates and causing issues there. And then if everything happens quicker, and again, your relationship with IntroLend, we're going to be able to find the lenders that are doing it the quickest, both retail and wholesale. You guys have the power of both with IntroLend. And so that's really cool. And then if we can then delight the client, delight the seller, and delight the buyer, and get it across the finish line even quicker than we thought, I think that's better than going out and saying, hey, we can do a 3-week close. I just think that that's getting tougher and tougher and tougher to accomplish, as we see not only is the lending environment kind of at capacity, but we also now have all of these interesting challenges in a housing transaction that we just quite frankly haven't seen for some time. And I kind of think those are going to get a little worse before they get better.
Yeah, no, that is great. I appreciate that. You know, from our standpoint, Dave, you know, my position on this whole thing is we're still going to beat last year, regardless of what happens in the next 2 to 3 or 4 weeks or 5 weeks or 6 weeks. It is not an excuse for us to underperform throughout the year.
I
As
agree.
we may need to adjust. You know, we're traditionally take July off, many of us, or we're not off, but we're not hitting it hard. We may have to change things up on our summer or family vacations, move things around. But this economy, what we're doing and what we've put together is designed. I remember many of the things you talked about when we first started working on this was we need to be designed to go through another downturn in the market with our footprint, with our bonding together. You know, we have a phenomenal team of professionals that are out working and are putting effort into this every day. And what I would say is thank you, because your platform does allow us to do this. We've added on to it as you've helped us support and put together. We've added the title platform. In 3 weeks, we've opened 135 new title offers. We've got about, as you know, 40 or 50, 45 or so transactions on the lending side. We've added Nick down into the St. George. Nick will be setting up shop in the St. George office. We've got Michael, and she'll be setting up tomorrow in the Salt Lake office. We've got Corey. We've got Utu. We've got Autumn and Dylan have been great support. And then of you, Mark, Steve, and your team. And we just want to say thank you, because it's actually allowing us to propel forward through a very difficult time. The last question I'm going to ask you is kind of off topic a little bit, but I know you personally went from running a major banking institution, you know, a lending institution for a long time, and then you kind of went into a position where you had to be a little more mobile. And so the question I guess I want to ask you is, you know, as our company's facing this, what technology tips do you have as far as being virtual and staying in business in front of your clients? And what could you say would be some things that you're using?
Oh, absolutely. Yeah, it's a great question. And going from, you know, showing up to a building with, you know, 350, 400 people in it any given day, right? Where you just depend on walking by somebody in the hall, and knowledge transfer is happening quite naturally to now we are a virtual business, to your point, and we're remote and we work digitally like this. So the number one thing is um, get familiar with all of the different virtual platforms out there. And there's a lot of them. And, you know, we're on Zoom today, and there's GoTo, and there's Skype, and there's Slack, and there's, you know, a whole bunch of different systems. Get familiar with multiple systems, because as you become more virtual, others want to do it as well. And if you're more familiar in navigating those systems, it's not as clunky in that first 5 minutes of the meeting, right? You just kind of can quickly get in and solve problems. The other thing is be patient. Nothing's perfect. It takes a little time. I think we tend to think that a virtual experience has to be as good as an in-person experience. It doesn't. It doesn't need to be. We can look a little clunky. We can screw up and blame it on the technology if we want. At the end of the day, you're going to have a conversation, and it's going to work out really great. But when it comes down to the human side of it, the thing I've learned the most about a virtual platform is communication, communication, communication. That sounds very cliche, but it's the little things that I find make the biggest difference. So I call it the virtual hallway. You know, if you're cruising along and you kind of feel like you're alone in your space, and somebody hasn't talked to you for a while, go walk through the halls of your business. You can do that virtually. And we do that. I check in constantly with my team just to say hi. And I think that that happens naturally inside of a physical environment. When you're virtual, you got to remember to do that. You got to go to the water cooler. You got to walk through the hallway, and you got to just say, "Hey, how's it going?" And they'll say, "Oh, hey, I'm glad you reached out. I had this question." And it happens all the time. And so what will happen if you don't do that is time will go by, a day or two, and this problem all of a sudden is sitting there, this challenge or whatever. And you're like, "Hey, why didn't you tell me about this?" And I'm like, "Well, I didn't see you." You know, so virtual doesn't mean you can't be involved. Virtual, you have to kind of, you have to, you have to question that. You got to go to the water cooler virtually. You know, you've got to just, and you can do it in a lot of different ways. You can send any of your team members or managers or admins or anything a text. You can send them a Slack message. You can jump into these kind of sessions anytime with them. There's really powerful tools like Facebook's Workplace. And you can do lots of fun things like share documents and video chat and different things. But learn multiple systems. I find that because we're virtual, every virtual company expects us to know their virtual system. So I've just had to learn them all. And then touch base, reach out. If you feel like you're a little lonely for a minute, you probably are. and just do that little reach out. You know, don't only communicate when you need to is the message. I think that virtual companies find that they have to train themselves in a different way to do that. But when you do that, I think that you find it can be just absolutely incredibly effective. You can get so much done, and it's a really, really powerful way to do business.
Well, good. No, that's great, and we're all learning this lesson now, whether we like it or not. We will be going to, as Remax Associates, we'll be putting out. Daryl's putting out some pre-recorded sales meetings for next month. We're not going to quit educating. We're not going to quit communicating. We're just going to all have to get used to it. So, well, I wanted to say thank you. Appreciate your time. I know how valuable it is. I appreciate your leadership and your guidance through these rocky times. We look forward to closing a few transactions and keeping the wheels going here. I just say, you know, hopefully your family's safe. You keep your hands clean, your heads up, and let's get the work done.
Absolutely. And one last quick thought, Ron. Thank you for the compliments. It's just been a thrill working with everybody at Remax Associates. This is such an incredible firm and an incredible group of professionals. And then be thinking about the power of this platform that you guys own. It's IntroLend. You can introduce your clients into the entire industry. So we are able to leverage the entire industry, the retail side and the wholesale side. And I think in this environment, it's really great because your IntroLend Utah platform's not saddled with a whole bunch of big expenses and margin calls and warehouse problems and all this stuff that makes it risky and tough. We built this, as you mentioned before, to be able to just work brilliantly inside of an economic kind of disruption, and we can see that happening now. But this new opportunity within IntroLend has also been created. Not only can we supply choice and option to the agents and the consumers from rates and products, we now can leverage it to make sure you can point transactions to where there's the best capacity, who can get the transaction done on time and quicker. And I think those are going to be really, really important things as we move forward. So leverage your chapter in all the different ways. And here's something that's really important. Ron, IntroLend Utah has capacity. You're adding new finance managers, and we've just added a whole arsenal of new processors for you as well. You guys are going to end up in a position better than a lot of folks, and I think that's really cool. And I think that you guys should take advantage of that. I think it's you're in a good position.
Yeah, no, and I agree, and I know that the finance managers that you've helped us bring on and we've hired can easily handle all the capacity that we have from our agents and our clients, as well as our family and friends. And we are seeing that. We are seeing multiple opportunities come in every day for refinances. So I thank you, and thanks for helping us build such a great team. And we'll we'll keep bringing the deals to the table, and I'm sure you'll keep helping us get them.
Absolutely. It's my pleasure. And thank you so much. Thanks for having me today.
You bet. Thanks. We'll talk to you soon, Dave. Thanks.
You're welcome.